Okay, folks, welcome back. Again, we're dealing with a commodity issue, so it's important you read this disclaimer. As a reminder, I'm not a licensed CTA. I'm not giving you commodity trade advice. Everything that's being discussed here is for informational purposes only and should be viewed in light of a paper trade only. Okay, June 2017 ICT Mentorship, ICT Index Trading, Lesson 3, the PM Trend. All right, the PM trend. This is the afternoon session in North America, and it's typically after the noon New York lunch hour. Now, New York PM session is viewed by way of defining the 1 p.m. to 1 p.m. hours New York time. You can see here on the chart to your right, the beginning and end is delineated. That whole shaded in blue area, that's the PM trend time window or the New York PM session. The true day high or low will tend to form in between the hours of 3 p.m. and 4 p.m. New York time. So typically it's the last hour. And between 1 p.m. and 4 p.m. New York time, there's typically a trend or a price swing that's seen daily. And this is going to be referred to in this month's content as the PM trend or the afternoon swing. The PM trend can be a continuation of the AM trend direction or an intraday reversal going into the close. Measured moves in the afternoon tend to be faster than that which was seen in the AM session. And typically 2 p.m. New York time sees the move begin. Now it can start as early as 1 p.m. in the New York time, but generally around 2 o'clock in the afternoon New York time it really starts to heat up and the sessions begin to move towards the closing basis of each trading day. All right, I want to look at a few examples here. Now again, these are the same slides from the AM session. All I'm doing is giving you greater detail by way of separating the AM and the PM session by way of the New York lunch. Just note as a point of reference, which is noteworthy, while I say the New York lunch hour, it's basically implying that lunch is noon to 1 p.m. It can actually be as early as 11 a.m. to as late as 2 p.m. Depends on the current market environment, but generally if there's a fast market in the morning, traders are going to want to probably work through lunch. So short lunch periods or short little periods of consolidation or retracement is typically seen in those conditions. When the session in the morning was rather lethargic, the full lunch hour could, by way of 11 o'clock to 1 o'clock or even 2 o'clock, can be seen. It's not an event that takes place a lot like that, but generally you want to be expecting some measure of consolidation or retracement around the noon to 1 p.m. New York time. After that time of day, again, our focus is going to be on what the market does in terms of trading between the 1 p.m. and 4 p.m. time windows. As you can see here, during the PM trend of this particular day in the E-mini S&P, the afternoon session drops down into a order block that was formed during the AM session. Then price vaults and trades off that bullish order block into the high of the day, which is seen in the last trading hour going into the close. Another example showing the relationship between PM trend in relationship to that is seen in the AM session. Okay, we have our time windows delineated here, and we see again price trading down into a bullish order block that was seen in the AM session, and price rallies away from the bullish order block up into a rejection block. Now again, it's not a lot of movement. Again, it's generally the nature of indices. There's going to be days where there's going to be a large range day and we can move in a lot of handles or full big figures, but generally it's not going to be like that. It's going to be small consolidation, expansion, that type of thing. In this case here, you can see the price moved almost 400 points in the afternoon session, and it went up into a rejection block. Okay, another example here, S&P E-mini. We have our PM trend time window delineated here. And again, we can see another rejection block formed. Price trades down into the previous range, trades below the last down close candle's closing price. And at the beginning of the PM session, that large red candle violates that previous session or AM session's rejection block, and there's an accumulation phase that takes place, and the market rallies about 18 handles. So nice PM session day there. Now we're going to look at the PM session or PM trend on the Dow E-mini futures. Again, it's the same delineation in time. We're looking at how price moves in the form of a rejection of previous high or a turtle suit. So the afternoon session can create a reversal, or it can be a continuation. In this case, we see the afternoon session creating a reversal. Okay, now we're going to look at the NASDAQ E-mini futures. Again, the same delineation in time. We're looking at the market trading down into a order block that was formed during the lunch hour, and the bullish order block sends price higher up into a rejection block that was seen forming in the morning session. In this case here, we see about 9 full handles traded up into going into the close. Nice PM session trade. And you can see it trading into that rejection block as noted here. All right, as we shown with the index SMT for the AM session, the same thing applies for the PM session, but we're going to be looking for the highs and the lows between noon and 3 p.m. New York time. So the relative highs and lows that form after noon or 12 p.m. New York time to 3 p.m. New York time, we're going to be looking at the relationship between all three of the indices and their respective lows or highs. And if we see, and for instance, when an institutional order flow is bullish, we're going to be looking at the lows comparably. One indice is going to fail to confirm a lower low that's usually seen, or what we typically seen in all three. When that occurs, that's bullish. We're seeing this occurring in the PM session here, and the opposite would be seen with institutional order flow when it's bearish. We would compare relative highs, and one indice is going to fail to confirm higher highs when all three of them would be moving higher. One will fail to move at a higher high, and that will be deemed bearish. In this instance here, we can see that the E-mini S&P in the PM session on this particular day, during the afternoon session, we saw a higher low form, and the Dow futures has shown a higher low as well. But notice what we see here in the NASDAQ futures contract. We see that it makes a lower low. That's a break in what would be expected. Normally, we would expect to see the NASDAQ create a higher low as well. For a symmetrical market, that's perfect. That would be viewed as confirmation. But what we're seeing here is there's an accumulation in the Dow and in the S&P, not seen in the NASDAQ. So while the NASDAQ was the lethargic sister or sixth sister of the three, the Dow and the E-mini S&P both showed relative strength by failing to make a lower low, and you can see the reactions after the divergence was noted. 2 p.m. here is the equivalent of 3 p.m. in New York time because the bar chart uses the Central Time or Chicago time. And by looking at that divergence, we can see that there's a strong accumulation in the E-mini S&P and in the Dow. Now, again, I use these divergences to signal trades in the E-mini S&P, or when I used to trade the S&P, it would be just me using these reference points. And if I see that crack among all three, my trade's going to be taken in the S&P. I'm not trying to trade the Dow or trading the NASDAQ futures. I'm primarily focusing on this crack to tell me if there's going to be an upside movement in the S&P or a downside movement in the S&P. The drop down on this particular day in the morning session, that could have been dropping down into a higher time frame discount array, and then it showed a rejection early on in the morning, and then we saw the larger higher time frame move unfold going into the afternoon session. And the accumulation that's seen by way of smart money, their footprint is seen here with the divergence with the index SMT. So now we've contrasted the characteristics of the AM session. We've introduced the quiet period of the day, the lunch hour, and then the restart or the resuming of activity with the PM session trend. Again, it begins around 1 p.m. New York time and extends all the way to 4 p.m. at the close. The last hour, 3 p.m. going into the last hour of equities trading, that last hour can create the opposite end of the range. Now, we mentioned in the AM session teaching that typically that opening range or first hour trading creates the higher low of the day. Now, if that's the case, then we know that the last hour of the trading day, which is 3 o'clock to 4 o'clock New York time, generally will create the opposite end of the range. So if we see a low form in the morning session and it's been a really strong up day, and during lunch we see no retracement and the PM session starts to indicate they want to go higher too, we can feel confident that any trade that we trade in the same direction that was made from the AM session will continue going into that last hour of trading. So as soon as the bond market closes at 3 p.m. New York time, that's usually when the market makes its high or low in respective terms to what was seen in the AM session. So if the AM session creates the low of the day or suspected low of the day, the last hour, 3 p.m. to 4 p.m. New York time, will create the high of the day. If the AM session or first hour of the trading day creates the high of the day, then we know that most likely if it's going to be a down close day, it will continue to go lower until the bond market closes. And shortly after 3 o'clock, you'll see the low of the day form and it goes into the close at 4 p.m. So hopefully this has been insightful to you. We're going to blend these things into a cohesive trading plan. Our next lesson is going to talk about how we can pick targets once we understand what session we're going to be trading in. Until then, I wish you good luck and good trading.